Welcome to Talk Tickers. Today, we are tearing down nLIGHT's third quarter earnings for 2025. And let me tell you, this was a really pivotal report that sent a crystal clear message to Wall Street about where this company is headed.
Okay, let's just jump right into the big reveal. The market's verdict, it was fast and it was loud. The stock surged nearly 15% right after the release. So you gotta ask, what did investors see that got them so excited? Well, it all starts with the headline numbers. They didn't just beat expectations, they kind of blew them away. Revenue came in hot at $66.7 million. That's over $3 million more than the street was looking for. But the real story, the thing that made everyone sit up and take notice, was the earnings. Non-GAAP EPS of 8 cents, when everyone was penciling in just a penny. That is a huge beat, and it's our first clue about the serious power hiding in this business model.
So where did this monster quarter come from? Well, it wasn't from their old-school commercial business. Nope, it came from a very deliberate and now very fast-moving pivot into aerospace and defense. This right here, this is the heart of the entire story for nLIGHT.
And this chart, wow, it just lays it all out there, doesn't it? It's a tale of two companies under one roof. On one side, you have the aerospace and defense segment absolutely exploding, up 50% year over year to a record $45.6 million. And on the other side, well, the commercial business is still finding its footing. This split is everything.
Now, this is where it gets really juicy. Think about what that shift in sales does to the bottom line. Moving away from lower margin industrial stuff and into high-tech, high-value defense products, it's supercharging their profitability. Product gross margin hit a record 41%. I mean, that's a massive leap from just 29% a year ago. That shows you the operating leverage here is very, very real.
And look, this growth isn't just some fuzzy forecast. It's anchored to real, funded government programs. We're talking about progress on the huge HELSI-2 program for a 1 megawatt laser. They're almost done with the DEM SHORAD system, which is basically a laser cannon on a truck. Plus, they just landed a fresh $50 million contract for a missile program. This is tangible, booked business we're talking about. Okay, so the quarter was a blowout, we get it. But what about the road ahead? Let's check out the guidance and, more importantly, how management handled the biggest questions hanging over the stock.
First up, their guidance for the fourth quarter was solid. They're projecting revenue to step up again, somewhere between $72 and $78 million. This tells you management believes Q3 wasn't a fluke. They see it as the new baseline for the company.
But that strength led right to the elephant in the room. It was the number one question on the conference call. What happens when that giant HELSI-2 program, the one driving so much of this growth, starts to wrap up in 2026? Is there a scary revenue cliff waiting on the other side?
And management's answer was, well, it was about as direct and reassuring as you could ever hope for. When an analyst asked if they needed new orders to fill that hole, the response was, quote, "Jim, based on what we are working on today, the hole is already filled." Boom. In one sentence, they just erased a massive risk that had been worrying investors for months.
So let's put it all together. Here's our take on nLIGHT as we look forward to their next report and beyond. This is The Next Call.
The thesis here is now crystal clear. That big pivot to A&D, it's working and it's speeding up. The margin expansion is legit. That big, scary 2026 revenue cliff, it's been dealt with. The whole conversation around this stock is fundamentally changed from a maybe turnaround story to a clear, profitable growth story led by their A&D business. So for the next call, we're modeling for results to come in at the high end of their own guidance. We see revenue around $76.5 million, just carried by that A&D momentum. And with that leverage we talked about, we're expecting 10 cents in non-GAAP EPS, which would be another solid beat against what the street is expecting right now.
Given all these moving parts, we're assigning an outperform rating to the stock. We just believe that the accelerating fundamentals, combined with a much clearer, de-risked growth path, is a recipe for the stock to keep outperforming its peers.
So what's the next catalyst for the stock from here? We think you're going to see the valuation, the multiple on the stock, start to expand. Now that management has put those 2026 fears to rest, keep an eye out for Wall Street analysts to start bumping up their future estimates. And as those numbers go up, it gives the stock more room to run. All right, that covers our core analysis. Now for our not financial advice segment, where we sketch out an interesting but totally plausible trade idea based on what we've just talked about.
So the idea is a pairs trade. It's designed to isolate what makes nLIGHT so special right now. Step 1, you go long LASR stock. Step 2, You're looking for a catalyst. Maybe a big new defense program gets announced in the first half of 26. Now for the hedge. Step 3, you sell short a group of their industrial competitors, especially the ones with a lot of exposure to China. The whole point is to capture nLIGHT's specific A&D growth story while protecting yourself from the macro weakness that's hitting the rest of the industry.
And all of that brings us to our final and without a doubt most crucial point. Please remember this analysis is for informational and entertainment purposes only. You should always do your own research. This is not financial advice.